Hi, this is Jeff Brailio, and welcome to our LLC education series. This video is on understanding a series LLC. This is a very becoming a more common LLC for our clients to set up, particularly our real estate clients who hold a large number of rental properties, because it's a convenient way to hold lots of assets. So before we get talking about Series LLC, again, today's presentation is copyrighted. It's always available for free online, so there's no need to steal it because it's available for free. Just go to our website and watch it whenever you want. Also, this course is for informative and educational purposes. It's not legal, financial, or accounting advice. And we provide this as education for our clients because we like educated clients. They seem to be more successful, and so we do our best to educate them. And if you have any specific questions about your particular situation, you can always give us a call at the office. We're happy to answer those and provide legal advice at the office, not through these videos. So just be aware of that. Also, here's my background. If you've been watching our videos, you've seen this multiple times. I've been an attorney for nearly 20 years. Lots of business entities, lots of clients, et cetera, et cetera, et cetera. There's some more stuff about me, la, la, la. And at our office, we do entity formation like LLCs and corporations, et cetera, asset protection packages, including a number of arrangements, estate planning, title and escrow, business and real estate transactional documents, some consulting, fiduciary services, and plus we do a lot of education, both live education in classrooms and free webinars. So make sure you check out our webinar schedule and join us for one of those. Okay, the Series LLC. The Series LLC is a newer and specialized LLC. It was authorized in the state of Utah about 8 years ago. And it essentially replicates a holding company and sub-companies, which is the way we used to do this. In the past, before Series LLCs were created, we'd create a holding company, and that holding company usually had the members, husband, wife, kids, partners, whatever, that were the owners of the holding company. But the holding company itself did absolutely nothing, literally did nothing, except for own 100% of sub-companies. And we create up a new sub-LLC owned entirely by the holding company, and that sub-company would then conduct business. It would own the real estate, rental property, or it would engage in a certain kind of business, and then another sub-company would engage in a different kind of business or own a different piece of real estate. So essentially you had kind of a parent company and child companies. About 8 years ago, when the state of Utah authorized Series LLCs, they did so to streamline this process and make it a little bit easier to create and run because clients were obviously setting up a lot of LLCs, which is great for me because I'm always happy to set up LLCs for you. But this was a more efficient way to accomplish the same goals. So the Series LLC acts itself just like any other LLC. It's got members, it's got managers, it's going to have a bank account. If there's multiple members, it'll file a tax return, just exactly like any other LLC. Except that this LLC is special, and it is authorized to create series within it. So when we say the word Series LLC, really we're creating an LLC authorized to create series. It's the series that are the sub-companies, the child companies. So the LLC itself really is just an LLC. And then we're going to create series that are wholly owned by the main LLC, just like a sub-company was wholly owned by the holding company. These series are not filed with the state of Utah, so they're not public record. They do not have their own operating agreement. The LLC, yes, it does. It's like I said, it's like any other LLC. It has an operating agreement. And in that operating agreement, there is special language that allows it to create a series. And then it is also authorized that those series will use the parent companies, the main LLC's operating agreement as if it were its own. So you do not need to recreate more operating agreements for each series. And you can create as many series as you want. Now, typically, each series will be identical to the parent company above it as far as members, managers, percentage ownerships, etc. You can create a series and change owners or managerial responsibility, etc., as if it were its own LLC. But at that point, you're going to have to create a separate operating agreement for that series, certainly a separate bank account, absolutely a separate tax return. So at that point, you're really ruining the efficiencies of the series LLC. You might as well, at that point, just create a separate LLC altogether for that partnership or for that situation, rather than trying to manipulate a series in a different way than the other series. So again, we generally recommend this when the ownership and managerial responsibility and all that's all the same for all series within it. That's how you really maximize the efficiencies of the series LLC. So again, how do you create a series? Well, you need to have a meeting in minutes and create documents by the members of the LLC that they're authorizing the creation of a new series, and they give it a name, and they sign that document, and that document becomes a legal document creating that series. So it's not something that you can just say you did. It is a legal act and requires legal documents to create that series. And that series is created by the members of the LLC itself. And we, of course, help you through the creation of your LLC with the appropriate operating agreement that allows the creation of the series. And we help you with the documents that create the actual series each time you need a new one. The nice things about Series LLC is it files one tax return. It has one bank account. So it really acts like one LLC with the multiple series within it. And each one of those series is separate for liability purposes. So this is a great way to separate out liability of one rental property to other rental properties. Okay, this is what it looks like in picture form. You got the members who are the owners of the LLC, just like they would own any other LLC. And that overall LLC, we're going to call My Series LLC. That's the name of it. And we're going to create 3 series within it because we have 3 rental properties. We have House 1, House 2, and House 3. So the name of the first series is going to be House 1, a series of My Series LLC. And once that is created, that series now becomes a separate and distinct legal entity that owns that house. And then when we buy our second rental property, we're going to create a second series. And we're going to call this one House 2, a series of My Series LLC. And when we get our third rental property, we're going to create a third series, House 3, a series of My Series LLC. What you call the series, House 1, House 2, House 3, doesn't matter. You can make up whatever you want. It's not recorded with the state, so you don't have to check to see if the name is available. We usually recommend something that identifies the house so that you know which house goes with which series. It just makes it easier for you. And we'll go through some examples in a minute on that. So that is the way the series works. It's one LLC with sub-series, I guess you could call them, that are wholly owned by it and are kind of part of it. Okay? Bookkeeping. Okay, we're going to go through some of the ins and outs of the series LLC now. Bookkeeping. Now, even though you can have one bank account, which is fine, and our documents specifically discuss this, which you may not find in other series LLC documents created by other lawyers. Again, we constantly revise our documents to meet the needs of our clients. And because most of our clients set up a series so they don't have to have a lot of bank accounts. And we put in language in our operating agreement that allows the LLC to hold one bank account on behalf of all the series. It makes it much more efficient. But it isn't something that is authorized because we're not exactly sure how a court would look at this and whether or not a court would require multiple bank accounts. So at the very least, we have authorized in writing, signed, that this LLC can have one bank account for all the series. And you can keep one set of books. That is, if you use QuickBooks, you can have one QuickBooks file and keep everything in that one set of books. However, and this is a very big however, every transaction must be categorized by the correct series. Now, if you have a bookkeeper or an accountant who does it for you, they will know exactly what they're doing. and they will know exactly how to do this. This is what they do all day long. They know how to categorize transactions. If you're doing it yourself, you can easily learn. Maybe sit down with your accountant or bookkeeper and ask them, to give you some guidance. But as long as every transaction, that is every dollar in and every dollar out, must be categorized by the correct series that dollar attached to. So if you receive rent from house one and you deposit it in the bank account, that transaction will be a deposit for series one. If you have to pay for a new roof and you have to take money out of that account to pay the roofer, then that transaction, that payment out, will be categorized series two. And the reason you do this is at any given time you want to be able to generate a report that can tell you the bottom line for any particular series. So you can generate a report and you just essentially search by the category since you've categorized every transaction, and it will tell you how much money is in that series. Because the thing you do not want to do is steal from Peter to pay Paul, okay? This is very, very important. This is commingling funds if you do this. And the issue with series is that it's a great tool, but if it's not used correctly, it is a trap for commingling funds because it's very easy to do if you have one bank account for lots of series. And you may have one rental property that is flowing positive, right? It's making lots of money. There's a lot of cash in that account that belongs to that series. We'll call it series one. That's your good property. Series two maybe is flowing negative, and you've got to make sure that there's money in that account to pay the $100 every month to cover the mortgage. So you go to the bank account and you see all the money in the bank account. You're like, oh, there's money in the bank account. I can pay that $100 for series two to pay the mortgage that month. But you have to remember, most of that money in that bank account doesn't belong to series two. It belongs to series one. And if you start using series one money to pay for expenses on series two, you've now commingled funds. So you have to treat each one of those series as if it were its own company. And also all you got to do, as long as your bookkeeping is good and you've categorized your transactions, just run a quick report, see how much money is in series two, and if it needs a little extra, you make a contribution as members of the company, just like you would an LLC that needed money. Make a contribution, categorize it for series two. Now series two has enough money to pay for the mortgage or the new roof or water heater or whatever it happens to be. So that really is the crux of a series LLC. If you can get that down, you're good to go. And if you use an accountant or a bookkeeper, your life will be a whole lot easier. But even if you don't, you can learn how to do this. And you can create even spreadsheets that can do this. But I highly recommend a program like QuickBooks because it really does make things easy. So yes, this is the big issue, the question that I get asked most. And so now you know all you need to know about the bookkeeping side of things. Just categorize every single transaction in and out. Make sure you know how much you can generate a report to tell you how much is in any particular series, and make sure you don't use money from one series to pay for the expenses of another series. Okay, good. Let's go on with a few other little things. Titling, each property must be titled in the name of the series, not the LLC name, but the full name of the series. Okay, did you understand that? Each property must be titled in the true name of the series that was created by those documents that created the series. You saw some examples previously. Go back right here. House one, a series of My Series LLC. That is exactly how it is to be written on title, on the warranty deed. Okay, so here are some examples. Let's say we named our, we had a blue duplex in Sugar House, and so we created an LLC, that is an authorized series LLC called Happy Day LLC. And we create our first series, and it owns a blue duplex. So on title, on the warranty deed, we're going to transfer title to, quote, Blue Duplex, a series of Happy Day LLC. Got it? Now let's say we created another LLC called Best Rentals, and we have two properties in Best Rentals LLC, one at 1205 South, the other at 6501 East. Okay, and we're going to create two series for those, one for each. And our first series is called 1205 South, a series of Best Rentals LLC. And our second one is called 6501 East, a series of Best Rentals LLC. Okay, make sure your title company understands what they are doing. This is very, very important. A lot of title companies do not use or understand a series LLCs. They don't know how to title in the name of the series LLC. A good title company will ask for all the legal documents to know that this actually exists. So you will need the documents creating the LLC, and you will need the document creating the series. That's that extra document that you create every time you want to create a new series. That way, the title company can confirm that this is an LLC, that it is a series LLC, and you have created a series called Blue Duplex. Okay. Remember that the series names are not filed with the state, so we don't file articles of organization or certificate of organization for the series, but they are on title. So just make sure that is very, very important. If the series doesn't own that rental property, and you put it just in the name of the LLC, for example, in our first one, let's say you titled the Blue Duplex in just Happy Day LLC, you have then made the parent company, the owner of that real estate. And if you are sued by the tenants in that real estate, they will sue the LLC, not the series. And of course, that LLC owns other series, which can now be attached. So you've kind of blown the separation of liability by putting it in the name of the LLC and not the name of the series. Okay, hopefully that is clear. Just make sure you title things correctly. Leases, since most series LLCs are used for rental properties, the landlord, when you fill out your lease agreement and there's the blank landlord line, okay, put the full name of the series. Okay, that is Blue Bungalow, a series of Happy Day LLC. Okay, just like it is on title. Now, here the issue comes up with banks in your particular bank. Some banks aren't familiar with series LLCs, and they don't understand that a series is really a sub-company of the main LLC. So generally, you're going to get a bank account in the name of the LLC, Happy Day LLC, just like you would have done with any other LLC. And so talk to your bank. If they understand series and they'll allow a check with the series name on it to be deposited into the account, that's great. Your tenant should make out the check to the name of the series. We are finding that many banks don't understand that and won't allow that. So in that situation, it's very simple. On your lease agreement, under the payment instructions, which almost all leases do have, write in, make the check payable to the LLC. Okay, so the landlord is the series, but you're instructing your tenants to make payment to the LLC itself. Okay, that is just, that's not obviously my preference. My preference would be that checks be made payable to the series, but if your bank won't allow that, then there's really no other option. And I'm okay with that because it's a demand from the bank. Then of course, as always, sign your leases as the manager of that series. So that's how you do lease agreements. Meetings and minutes. These is kind of your corporate governance, and you're going to treat each series as if it were its own LLC. So any decisions, meetings, votes, record keeping, etc., receipts should be done for each series, just as if it were its own LLC. So the series LLC is very efficient and it's very convenient for holding a large number of rental properties and separating out liability. It can reduce your legal fees, it can reduce your accounting fees, and it can reduce multiple bank accounts. But from a managerial standpoint, you really do need to treat each series as if it were its own LLC. So it doesn't necessarily reduce your work. Okay, and if you want to take shortcuts and not treat each one of these series as its own, you could lose that separation of liability one series from the other. So again, series LLC is a great tool, but make sure you know how to use it, and then you can use it effectively and to your advantage. Okay, in summary, that's kind of just what I said. It's great for holding a number of rental properties. It'll save you on legal fees, accounting fees, bookkeeping, and having a number of bank accounts, but from a managerial standpoint, they are all separate entities and should be treated that way. So I just, a little redundant, but I think redundancy is good here because you really need to understand that. Okay, if you have any more questions about a series LLC, hopefully that answered most of them. or you need to set up a series LLC, just give us a call at 801-560-2180. Thanks.